so much for having me.
All right, welcome everyone. This is an X Space with Kalu. We're here every weekend, and of course, we're talking money, finance, and of course, the economy. But on a personal level, we'll try to make it personal to you. How do the topics of the day affect your personal wallet? Today, we're going to talk about the African tech space, right? I've got a great guest with us today, Mr. Bakar. I'm going to let him introduce himself, but it's someone I do follow, and I get my tech news from what's happening in Africa, what's happening in the Nigerian tech space, the funding, the issues, what the folks are doing there. I like that space because I think it's a new space and it's a space where entrepreneurs, young entrepreneurs, are actually making a lot of wealth for themselves and building institutions, amen, on that space. So I will just get him to come in, even if we're just going to talk around the stories that he writes. Just give us an insight in there, and then we'll take it from there. Again, apologies for the 30-minute delay, but I'm glad you guys are all in here, and I do appreciate you. So, Baraka, you've got the floor. If you can come off mute and just introduce yourself, I'm sure everyone would like to know you. Go ahead, sir.
Yeah, thank you so much for the space. Thank you so much for having me as a guest. Hi, everybody. My name is Abubakar Idris, and I am a technology reporter. I cover the African market, and right now I cover the US market. I have been reporting on the tech industry since 2018. By January next year, I'll be entering my 7th year covering the industry, which feels like a long time. And I've done everything from writing about new products that just got into production, all the way down to the big tech companies and even the big telecom companies as they also make their own expansion into different aspects of technology services, whether it's financial services or with digital solutions broadly. And yeah, I've had the pleasure of interviewing and talking to founders at the point where they were still at their early stages, up until when they've become behemoths themselves. And I'm talking about companies like OPay, like Flutterwave, to some extent like Paystack too, about their businesses and what challenges they faced, how they've grown it, and how they're able to maintain value for their customers here on the African continent. So yeah, that's a little bit about me.
Great. Yeah, okay, again, thanks for doing this as well. Let me just jump right into it, right? I always hear that Nigeria is the number one in terms of attracting, is it FPI or investment funds in the tech space in Africa. Is that still the issue? Is Nigeria still number one? If we're not, who is taking over from us?
Yeah, so Nigeria is still number one. Nigeria is still the number one market for foreign direct investment when it comes to foreign portfolio investment when it comes to the tech industry on the continent. And the reasons for that is it's obvious. I mean, when you look at the population statistics, you notice that Nigeria is not just the most populous country on the continent, it also has one of the youngest populations. And that presents a shit ton of opportunities for any business, any company, any investment firm that wants to do business on the African continent. So they're really excited about what the Nigerian market can produce for them in terms of return on investment and in terms of impact. And then also you notice there's a lot of opportunities in terms of the challenges in the country. And so, you look at 200 million people who are struggling to make payments, 200 million people who are struggling to, ship an item from Lagos to Abuja, 200 million people who are struggling to find a decent way to save money, and at the same time, 200 million people who are looking for right access to educational material that can move them, not just in terms of learning new things, but also improve their ability to change jobs and to acquire new skills that helps them to earn more money across industries. And so all of these things are things that are interesting for investors, interesting to founders. They all pay attention to these trends and they want to invest here in Nigeria. But at the same time, there are a couple of other countries that are fast growing, having the same level of opportunities that Nigeria has. And so you look at Kenya, you look at Egypt in particular, and then you look at South Africa. These three other countries are also doing really well. They're attracting hundreds of millions of dollars in terms of foreign investments and tech investments broadly, because the investment capital is coming from not just foreign investors but also local capital in these countries. And so yeah, pretty much Nigeria is still the most desirable place for people to want to do business, but it's also, the level of funding is changing in the last couple of months, in particular, because of the high level blow-ups and the macroeconomic challenges in Nigeria, also in these other places too, but particularly Nigeria because it has hit us significantly, and nobody knows how badly it's going to get over the next couple of months at this point.
Gotcha. And when I hear you say the population demographics, do I interpret that to say, hey, the growth in Nigeria is strong, but it's not really been because of the government, but because of the attributes of Nigeria? I mean, my question really is this: has the government done enough to drive this growth, or has this growth been organic because it simply had to happen?
Right. I think that's a really interesting question. I will start off by saying one of the things that investors, particularly foreign investors, pay attention to when they want to invest in any market abroad is the political stability in those regions, in that market, in that country. And so they are very, very careful to make sure that the market they're investing in is not volatile, and so they are able to have decent confidence in terms of the safety of their investment and their portfolio in those countries that they invest in. And so when you take it from that standpoint and you look at what has happened in the Nigerian democratic space in the last decade, it's been interesting. To an extent, when you look at the early 2010s, to an extent, the government did do a lot to usher in the current digital age that was seen. So you see the likes of Omobola Johnson, who was Minister of Digital Economy, ICT, including telecom services, and she did a lot of work to improve the level of broadband in the country way back in 2010, 2011, 2012, until she left in 2015. And so that kind of set the trend for what we're seeing today in terms of the boost to the industry. However, that is not the only thing that startups are paying attention to. It is a good trend. Increasing access to telephony and broadband is the starting point for any innovation in a market like tech. But on the other hand, people have been doing other things outside of what the government has been able to do for them. They've been finding new ways to play in a market like, say, financial services, logistics, despite what the government has put in front of them as various challenges. For example, you look at what happened to the bike-hailing companies in Lagos. It was a regulatory disaster from Lagos that shut down that industry. And then you have, several businesses that are also very careful about how they innovate and how they interact with the government and the regulators in that space. And so overall, I would say the government did set the tone for innovation that would happen a decade ago, but eventually it became a kind of a dynamic process in the sense that in some industries there was some regulatory or government support. In other industries, innovators had to figure things out by themselves, and they've been able to show the value that's possible despite or without government assistance holistically. So that's what I would say in terms of government support for the industries or for tech.
Okay, great. And this is a question I always wanted someone to answer for me, right? When we hear that Nigeria is getting, or someone that has scale, we hear a fintech in Nigeria has scale and they got about so and so million as startup capital and all that. Could you just explain to me and maybe the listeners, where does that money stay? A company scales, a company gets money. Where is that cash? I get it, but I wanted you to understand because we always hear we are scaling, but we're looking for dollars. So is the money in Zenith Bank or is it in SBL Bank? Walk us through it.
Okay, so there are multiple things loaded in that question. On the one hand, when you talk about where the company is, where the money is deposited, typically people would say where the money is domiciled. You have a bunch of things that would come to your mind. On the one hand, you begin to wonder, at this, when you want to think about where to deposit money as an entity, as a company, the first thing you have to think to yourself is, where is your corporate origin? What are you incorporated in that particular jurisdiction that you want to deposit money in? And then second is that case you want to deposit money in a significant operating market for you? So the reason why I have to distinguish this is, when it's no secret, like many startups that operate in Nigeria today that we identify as African startups in quotes, they're not full, they're incorporated abroad in popular tax havens and favorable jurisdictions like the state of Delaware in the US and other places in the world like Mauritius, for example, or even the UK. And so they set up subsidiaries to operate here in Nigeria. And so when they think about, when you ask them the question of where is the investment fund, fund that they've raised, where have they domiciled it? The first thing that they would figure out is, do they want to put all of that money in Nigeria, or do they want to split it into the operating markets where they operate? And so, that's the starting point. Yes, but for many companies that operate in Nigeria and have their primary market in Nigeria, the bulk of that money is going to flow out, from their corporate holdings offshore, and they might move a significant chunk of it down to the Nigerian market, or they might even move the entire thing to Nigeria if it's comfortable for them. And so that is where the money would stay, and then they would use the money in the bank to scale their business. And what they typically mean when they say scale their business is they would invest in people, hire new team members, hire talent, structure up the operation of their business, hire people on the ground, and then they begin to spend money on marketing, whether it's hiring influencers or, doing billboard ads, all those things. And they would spend money on growth typically and also they'll spend money a lot on product development, like, building out the new apps that people would eventually use on their Android phones or their iPhones, and the feedback that people get or people will make when they use these apps and realize that, this thing isn't working well, this thing is working well. They have to take all of those inputs in and make sure that the app is working in real time. And so all of that takes money, all of that takes planning. And so this is where they eventually or typically would spend the money that they've gotten from investors. And the idea is you are able to build a product up to a level where it is stable, people can use it, and you begin to spend, a part of your operational funds on maintaining that product, whether it is on servers or paying developers to maintain those servers, or paying developers or people generally to maintain good customer support and other kind of assistance to the business as a whole.
Okay, yeah, so the follow-up with that would be, okay, and I'm not trying to be cold here, but just have to ask you, so why do we celebrate it so much if, when we say a Nigerian or African startup has raised funds? Because a casual reader would assume that if those funds were raised and it's in a Nigerian or Kenyan paper, it means that the Kenyan or the Nigerian economy is getting that fund. But the way I understand it is that that's really not so. It's really funds that are still going to stay in the US. And then, of course, if you want to buy a computer, we send it over and all that. So then why do we celebrate it so much?
I guess it's on two levels. The first level is simply the fact that it's generally hard to raise money as an entrepreneur. It's really hard to convince somebody that you have an idea or you have a product or you have something and you want to service the market and you want money to be able to do so effectively. And so when you take it from that standpoint, it's something to celebrate generally, that somebody is able to raise $100,000, $10 million, $100 million, $200 million to scale up a business in any sense, in any climate. That is the thing people are really, really excited about. It tells you, first, the level of optimism that investors have in the person who is running that business. It tells you the optimism that the investors and the people involved in making that investment decision have about the industry and the company and the business that these guys are trying to build a solution for. And so that is generally all good indicators broadly. And so that is generally something that would be exciting to anybody, because it's really hard to raise money. And if you're able to raise money from investors, it is something you would want to be personally proud of, and people would also want to congratulate you for pulling off. And then if the economy is in a crazy spot as it's been in the last 2 years in particular, it's all the more reason why people want to applaud you, because you were able to raise a lot of money, or some money, despite the fact that the global economic environment is not favorable to risky solutions, which is what startups are. Gotcha. And also the fact that it's challenging. But then there's other aspect of the reason why people celebrate when founders raise money. You're right to an extent, in the sense that the funds that they might raise might be based or domiciled abroad, because that's where many of these companies are incorporated. But in reality, they are bringing economic activities broadly. You're not looking at money that's in the bank. You're not looking at money that's simply in an insurance, what's it called, pattern in any of this industries that simply hold money. You're looking, you basically, it's basically economic activity that's happening with the money going around and generating value for the economy. So on a broader scale, I would say when you consider the fact that a company that has raised 30 million, for example, might want to deploy 10 million or 15 million over the next 2 years on hiring people locally in a country, on spending money on developers locally, on marketing locally, all of that constitutes GDP activity for a country, for an economy, for a sector. Okay. And so it's always positive in that regard.
Okay, I mean, I'll take that. Clearly, that is perhaps, you're completely correct. I will take that as a win. Like I said, I just wanted to, for the benefit of the audience listening, this is not like money that's going to come in today and change it, the amount, the exchange rate of the dollar on the streets of Lagos. That's actually where I was going to. Okay, I've got Olumide and Satoshi. I want to ask the question. I have a follow-up. I want to follow up with you. And maybe let me get Olumide to hop in here if I ask my question. Olumide, you've got the floor if you want to quickly ask the question, or you have to go ahead.
Yeah, I think Abubakar did a very good job. Interesting conversation, and particularly the fact that the fintech space or the tech space is very active in Nigeria. In fact, the biggest market in Africa. There are 3 questions I want to ask, but first of all, I think it's a very interesting topic in terms of valuation and why we have many issues in this space. It's often fair for us to look at the good ones, the ones like Piggy, Paga, IntoSwitch. We've seen the fact that these unicorns have really done great work in the industry. In fact, at some point, you look at what IntoSwitch, how they've been able to bring in funds from Visa. We saw how Stripe bought Paystack for $200 million. But apart from that, there's still a lot of problems which I would like to ask Abubakar. So the first question I would like to ask Abubakar is, why is it that we focus more on valuations rather than the sustainability of the business? So this is what I mean. If you look at the fact that a lot of businesses are not sustainable, I don't want to call names, but you look at some valuations, you tend to wonder. Actually, not because of why I don't want to call names. So you find out that some business entity, the kind of founders, the understanding about the subject, and the way they treat customers, the cash flow, and the way they're reporting is, you now wonder the viability of the business. What's the exit plan? Also, the other question I also want to ask you is that, why is it that we don't really look at the successful ones, amplify them, we celebrate just valuations, and rather most of them become half-baked or bad examples for futuristic. Then lastly, many of these products, like, we hear different names. I don't think I've heard more than, since I've been writing in the financial space, I've heard more than 300 companies. But I can tell you that I've spoken to many of them, and I realized that what we hear is not what we read or what we know. So the thing is, there's this knowledge gap, and there's the fact that they just want to cash out. We've seen many abuses of funds and things like that. Now, customers have lost money. Look at the space I am in, for example. I have so many DMs of people putting their hard-earned funds in fintech firms, and these guys are still on Twitter, not arrested. These guys they still act like nothing is happening. So the question is, these are things that you cannot see in the banking industry, no matter how complicated the Nigerian system is. Why is it? Is it that the media has been bought? Is it that everybody's been afraid? Is it that the EFCC, what is really happening? Because we need a sheriff to sanitize. So these are questions I'd like you to talk or amplify on. Thank you.
Interesting. Yeah, put that back on the spot. Those are
very interesting questions, and thank you, Lumide. I've been following your work too, and thank you so much for those questions. I jotted them down, and I will take them one that. Unless Carlo has something to say before I start.
No, go for it. I mean, my question was to you was going to be about the
I think you should answer his question first because I've got a lot of
Dollar, hold. I think this is the same question sort of I was going to ask. When you answer his question, I was going to go specific into Dash. I was going to use Dash as a platform to talk about. That's why we have the scaling on our topic header there, right? Is the issue that you have very, very smart people that understand how to code but can't balance the balance sheet? Or is it just that, man, this is where I want to go. So maybe answer them this one. That's kind of my question. Do tech bros need to know how to balance a balance sheet apart from knowing how to code? But go ahead and answer them.
You know what? Carlo, I work as a techie. Well, I don't work as a techie. I work as a business analyst now. But I work with techies a lot. Devs or whatnot. When it comes to funding, you've got to be able to convince somebody to part with their money. And if they are parting with their money, they want results for it. Be it in Nigeria, be it in Canada, be it in America, wherever it is, if people are giving you their money, they want results for it.
Point made. Let me get Abakar to hop in and take Olunde's long question, and then perhaps he can dovetail into this idea of the capacity, the scaling, the going concern issues we have about these very smart people. Go ahead, Abakar.
All right, thank you. The Dash question is, it's an interesting one, but let me start with Olunde's question. So I have 3 questions that I've jotted down. So I'll take the first one first. So you talked about valuation. Why is there a lot of focus on valuation and not on sustainability? I think that is a very interesting question, and we as journalists too have tried to answer this question, and we always ask these questions too. Many times. For example, when I jump on a call with a founder, when I jump on a call with an investor, and I'm asking them about the company that they're, either the company that they founded or the business that they invested in respectfully, I always try to get a sense of what's the valuation like. What is the metric you use to judge the success of this business? Is this business actually growing? Is it working as, it says it would? How is the business model like? How do they make money? These are bare bones questions that I would ask anybody, that I'm writing about or I'm talking to. And sometimes I get very good answers. Many times I do not, which is fine. I do my work anyways. But yeah, valuation is one metric to judge the sustainability of a business or the success of a business. What it tells you is how much that company is worth today. And what people who have invested in that company feel like that company is worth to them. Especially when the company is not public, which is the case of many of the startups that are in the space today. They're not public. And so their evaluation is entirely subjective. Whether they're worth $1 billion, $2 billion, $100 billion, or $1 trillion, we can't say for sure until they go public. All that we know is everybody who invested in this company or wants to buy shares or currently has shares in this company values it at this amount. That is for their own balance sheet. It's for them. And so a lot of things could happen. The business could revise its valuation to a down round, which is what it's called. Or they could also, raise follow-on funding and increase the valuation. Again, when a company raises money, it doesn't necessarily mean that the valuation will go up. It also doesn't mean that it must go down. The valuation goes whichever direction it wants to go based on what is being discussed with the financiers. And so that's a different conversation. When it comes to sustainability of the business, that is a very different conversation. The valuation doesn't tell you realistically that a business is going to be sustainable. It only tells you that in today's world, based off the current conversation about what the company is worth, this is how much it is in terms of valuation. It doesn't tell you whether or not that business is going to be successful, but it gives you a hint. If you value a company that started 2 years ago at $100 billion from nowhere, or from $10 million to $100 billion. That tells you how excited the people in the room are when they give a company that kind of valuation. That tells you maybe something huge is coming or something else is coming. But again, I'll still stick on valuation a bit. Valuation itself is driven by several things. It could be that they are marking up the company based on comparables. Like, for example, if you were to value a Zenith Bank, for example, if you assume a Zenith Bank is private and you want to value a Zenith Bank in today's world, you look at how much a Zenith Bank has in its, how much deposit it's holding, what its income is like, what its balance sheet looks like holistically, what the cash flow feels like, and then you do a comparison. You compare it with a GT Bank, you compare it with an Echo Bank, and you figure out, okay, if this company is compared to this other one, how does it look like? Would their share prices make sense? That's like a simple...
Abubakar, the thing is, if I own a company, and I value it depends on... If I come to you as a financier, or as somebody who is an accountant or something like that, it depends on how I pitch it to you to say, you know what, my company is going to be worth this, and this.
Yeah, I mean, that is entirely... That is fine. If anybody who is smart enough to accept the pitch base of something like that and give it whatever valuation it is, it's fine. If it works for them, it works for them. But the real world, what you do is you would obviously start with looking at the financials, and that is how you do it. Especially when the company is at Series A, it's at a level that is fairly decent enough for you to put a dollar valuation on what the company does. You would typically look at the financials and project. That is how you do it. But all that by the side, back to the journalism aspect of it, I would say that we do our fair bit to make sure that we're not only fixated on the valuation aspect of a business. We want to know how sustainable it is, and which is why you're seeing a bunch of stories that people assume or think is negative in the media, because for example, there's been a layoff at a company, or a co-founder has exited a company, or a company has it's seen a huge spike in the number of customers who are fleeing or withdrawing their funds to go elsewhere. All of these are, issues that businesses would face at some point. Maybe many of them would not face it. Some of them might face it. But generally, these are issues that we track as journalists, and we use that to figure out how sustainable the business is as a going concern. But that's for the first question. We don't always focus on valuation. We try to get as much detail as possible about the sustainability of a business.
Thing is that business people take past the whole point of being an entrepreneur. I am telling you this from a point of,
All right, so just a bit. So, Dollar, let me get Abubakar to express himself, and then I'm going to call you in to speak. Just so we have
yeah. Thank you.
Gotcha.
Alright, so quickly moving to the second question, which is why don't we profile the successful companies that do not always have the fancy valuations that you would see with other companies? I get it. I agree too. We are constantly looking for the valuable companies that are not always in the spotlight, and we try our best to write about this company. And now speaking from the journalism side of things, and we do this fairly well. You would notice, like, way before OP became a $2 billion company, I personally wrote about them quite a few times. And I wrote about them not because they were raising money, but because of how the business model worked. Same thing, GoCada. GoCada was never a $1 billion business. But when you think about them, when you hear the business, or when you hear how much coverage they got way back in 2019, it feels as though they were, multiples of millions of dollars in valuation. But really, why they got so much coverage was because we could see on the street that this company is there, it's doing this, it's helping people move around. It's something that we need to understand. And we did a lot of coverage back then until the business had its own issues because of the government. management on the one hand. And so, yeah, we're constantly looking for, similar businesses like that are thriving, but are not always in the limelight, and give them the spotlight that they deserve. And it's not always going to be driven by conversations about valuations. So, that is how we typically do things. And with the level of access we are able to get with some of these companies in terms of whether or not their CEOs want to talk to us, their other management team want to talk to us, that way we're able to write a more compelling article about any of these businesses. For the third question, which is about having a sheriff in town that looks into those companies and makes sure that they're able to understand the issues that customers are facing on the one hand, and whether or not some of these businesses are fraudulent. I would say this: we do not know for sure as journalists. The disclaimer here is I am a journalist, so I'm speaking from the perspective of somebody who actively covers this industry. I will start off by saying that we do not know fully whether or not a business is fraudulent. I cannot say that this company is a fraud until I do the work. I cannot say it's a fraud based on 2 or 3 customers coming to tell me that it's a fraud. I would have to do my investigation. Investigation takes time. Investigation requires a lot of resources. Investigation requires a lot of access. It requires talking to people, it requires talking to customers, it requires getting, to some extent, the company's financials too, to figure out, is this money that they claim to be in the customer deposit, is it actually there? Like how much of the customer deposit that they claim to hold is actually still in the balance sheet to be? All of that is, it's a process, it's delicate, it's difficult, and it's particularly challenging in an environment like Nigeria where people do not talk. People only talk when things hit the fan. People only talk when it's gripped them in the neck. And so, you can get a sense about when a company is not doing the right thing by hearing what the customers are saying. But you do not immediately, as somebody who covers this industry, immediately begin to throw around the word fraud until you have proof. And when I say proof, I don't mean simply 1 or 2 people coming to tell you that, I heard that company is a fraudulent company. I mean like real proof that to an extent you can stack up in the courts if you are sued. If you do not have stuff like that, then if you try around the word fraud, you could get in serious trouble. And so that is typically how we do things. You do the investigation, and then you can begin to, try out the right terms to describe a company. But generally, we do pay attention to many of the issues that these companies are facing.
But can we say we don't like this? Like if we see a CEO like going to the Dash issue, I saw your reporting on Dash. He was earning $600,000 a year. $600,000 a year. I don't think the MD of Chase Bank, the largest bank in the world, earns $600,000 a year. I doubt it, but I don't think he earns $600,000. When you see a startup earning $600,000 a year, that's a red flag for any stock investment analyst. Will tell you, red flag.
So a bit of clarification. First thing, I wasn't the one who wrote the initial report on Dash. It was reported by Henry Nzekwe, who works at WeTracker, and he's a fantastic guy, beautiful article. On the other hand, also to clarify too, I know for a fact that the CEO of JP Morgan earns way more than $600,000 a year in terms of full compensation. I'll put him at $35 million.
No, the point about the point is that on salary, man, he doesn't earn $600,000. He earns on stock, but if he makes a profit, and you make my point. He gets a stock option. He gets a bonus plan. If he hits this, he gets that. But his salary, $600K is how much a month? Who can do the math? $50K a month? Dollars.
So the funny thing about salaries, and that is what ties into the overarching question you're going to ask me, which is about corporate governance. It is a red flag, right, in the context of what the business does. There are certain cases where definitely a CEO can be so consequential to a business that the board will decide to pay him however much they want to pay him or her to retain their talents as the CEO of a company. That is something that the board and the CEO and the management team of the company would have to decide. And and so it's on its own. In the context of the company, it depends on what those guys are discussing and whatever value they think the CEO has. In the space or in the context of Dash, I would say based on reporting that was done, based on reporting from a year ago or 2 years ago, it is mind-blowing that a company like that could be paying the CEO that level of salary. And so that is why it's so surprising, because when you look at
what it is, when you're making decisions, that is the highest paying job on earth. Decision maker, and you stick by your decision. That's why they're getting paid that money. For me personally, I think they should be paid that money because they are making decisions that over.
Maybe Abakar should give.
They should be stacked in the morning.
Abakar, give some background. How old was Dash? Many people are not following. How old was Dash? How old was?
Okay, so just I think Dash was like max 4 years old.
So 4-year-old company.
It's a 4-year-old company.
Startup. It's a startup.
And
Okay.
it was trying to like provide a consumer like it was trying to basically operate a mobile money wallet in starting with Ghana to help people make transactions and make payments and buy recharge cards, do all the basic stuff that Opay is doing in Nigeria. At the same time, play around with international payments in the sense that all of that mobile money accounts that exist in Ghana, it will try to connect it with mobile money or other bank accounts in Nigeria, similarly in Kenya, in such a way that if you're in any one of these countries, you can transfer money across this country with the Dash network, with the Dash app. Theoretically, that was what it was. That was what the business model itself was.
I have a question that you're not clear. I'm talking about customers' phone. I don't really even have much with that because the board would have agreed for that kind of outrageous bid. Maybe it was at least that would be the discretion of the board since it's a private company. But customers' phones,
Customers' funds is a red flag.
we have people that have lost funds, but we've not seen. There are startups that have held people's funds for about a year. I can tell you this year alone, I can count like, if you put it at a figure, it's more than 5 billion naira. Just one startup is saying that, okay, we can't give you your cash, we're going to turn it to equity.
Olumide, are you asking Suleiman to? What are you asking from him?
I'm asking you that, why is it that those things are just like customers bear the pain and we make a blog about it?
I know, but what's the ask, Olumide? Are you asking him to, because he's just a tech reporter? I mean, are you asking him to explain what's happening, or that why don't he write about it? I'm trying to get what you want from him.
No, I'm just trying to get what, because yes, he's a tech reporter, but he has better perspective in terms of maybe there are things that we don't know, because me, I just write about markets or public listed companies, and things like that. So I'm trying to see whether I'm trying to work minds. Maybe there are things that we don't know, that these things are happening, and it's like a geocaching. Because if it happens with banks, we know what will happen with those CEOs. As problematic as Nigeria national industry might be, if it happens in the regulated industry, we know what will happen to them. So why are these things happening? I'm becoming so much. A lot of people have been crying on Twitter. It's becoming too much.
I guess the key word there is regulated industries. Like when you're in a regulated space, you know what is expected of you. You know how to handle yourself. You know where the red flags are. But if you're not in a regulated space, the rules are a little bit nuanced. It's not even just nuanced. The rules don't exist. And then you as a customer yourself, you understand to an extent what is expected. Or to an extent you might not know, but you understand bare bones. You are not as safe compared to somebody whose money is in the bank. If you're in crypto, that is typically the rule of the game. You are exposed on the bare basic level. You're exposed to volatility. You're exposed to fraud. You're exposed to so many things. You're also exposed to the fact that the platform where your crypto is domiciled, where your wallet is right now, might not be as safe as you think it is. And we've seen high-profile blow-ups that are not even, we're talking about Patricia. When you calculate how much deposit Patricia was probably holding at the time it fell apart, it's probably not more than $100 million. But we're looking at FTX, which is one of the biggest in the crypto space. It blew up in real time. FTX blew up in real time, and it was holding tens of billions of dollars worth of crypto tokens, or should I say deposit, for customers. And that is still something that is baffling to everybody.
No, Dollar, hold on. I want to get some Dollar, let me get Modena. Olumnia's question is going to be there forever. Satoshi, I see I'm going to bring you up. Don't worry. Let me get Madonna to speak. Just because he's been modern day philosopher, he's been hopping in and out. Let me get him to speak, and then we'll circle back. Modern day, go ahead.
Thank you very much, sir. Am I audible?
Yes, please go ahead.
Modern day, you have to unmute your mic.
Yeah, I think he hit it in there.
Am I audible now?
Yes, you are.
Yeah, we hear you.
Okay, thank you very much, sir. My question is on jurisdiction. I wanted to talk about Patricia, but I'm happy that the topic is now part of the discussion. Patricia relocated to Estonia before they came out and told us on Twitter that they go convert some people's assets to a different asset without anybody's permission. And from the look of things, the matter has died down. So my question to Mr. Abubakar, which is my first question, is can you please enlighten us on jurisdictions and legalities concerning these tech companies from crypto to microfinance banks? Then my second question is on Namibia. I hear that they are building a Silicon Valley inside a bush, because I don't know where they build something inside a bush, but they are building something there. So please, I want your personal opinion about that case. Are they for real? Because I watched some interviews and some people, because some back they will say that their laptop cannot break. I'm like, the same Africa where all of us they say that they have a fridge, they have a phone, they have this, they have that, people should come here and invest. So please, sir, my second question is Namibia. Is it just normal Africa and people that they are catching, or they're really doing something serious based on your research, journalism, and looking for that jurisdiction, sir? And please give us some legality.
For the record on Namibia, I'm not aware of that. I don't know much about that trend, so I can't speak to it. For the first question, which is Patricia, I would say I want to lay out the facts. The first fact here is Patricia did not recently relocate to Estonia. Patricia relocated, it moved its operations abroad I think in 2021, when the Central Bank of Nigeria first announced that banks should no longer work with cryptocurrency companies. That was when that happened. That was when many of the startups in the crypto space decided to shift domicile, or how they operated as a company into the restructured into offshore entities. They no longer were based in Nigeria as corporate entities. And in the case of Patricia, it moved to Estonia and then to Lithuania, which is the last place it was. It's listed, which is one of the countries it's listed on its website. So it's there. The information has always been public for the last 2 years, and so it's not a recent trend. It's not. They did not just move abroad simply because, or before this issue, they've moved there way before now. And so when it comes to jurisdictions, the points to also keep in mind is it's a difficult conversation because, one, I'm not a lawyer, and second, I would say that the most important thing is, where does this company operate? Where are your customers based? And so that itself opens you up as a company to those type of questions, to those type of conversations, to those type of risk. A company might say, because they are not based in Nigeria, for example, they are not liable to Nigerian laws. And to some extent, when you read up on Patricia's own terms of service, they do use some of those language in their terms of service, which happened way before now, I should add. It was not right before they blew up. It was not right after they collapsed. It was not when they ran into trouble. It has always been there in their terms of service. But the point still remains that they are holding funds on behalf of Nigerian customers for people who are based in Nigeria. So they have some exposure to the Nigerian market, and they do have to, pay attention to Nigerian laws and, take action in that regards. But again, I'm not a lawyer, so I cannot say for a fact that this is how this thing should be done. But from general treatment and precedents, I would expect that based on where they operate, based on where they have customers, they do have to treat their customers fairly and not just simply up and disappear with customers' assets.
And again, Abubakar, just for context, who is Patricia? What does she do? What happened? Just for context, for folks that are listening.
Right, so for folks who do not know, Patricia is a cryptocurrency platform. It was started, I think, way back. I think maybe the earliest time I heard about them was in 2019, but I'm sure they've been around before that. And so they became way popular in 2020 when they sponsored the Big Brother Nigeria popular reality TV show, and they've remained famous ever since. And they have held millions of dollars on behalf of Nigerian cryptocurrency users until the company first had an issue with the cyber attack last year, and then they officially confirmed the cyber attack earlier this year. And since that report went out, the company has been struggling to repay its customers who were trying to pull out their funds in a frenzy. And so the company has been struggling to fully repay crypto holders. And so right now it's currently in a state of, should I say, it has fallen apart as a company generally. It's still trying to repay customers, and it's asking for patience and different schemes to get customers to calm down.
And this was because of the fraud. Abubakar, you said they were hacked, more or less. That's what happened. They were hacked.
Yeah, according to reports, they were hacked, and they did confirm that they were hacked, and they lost a significant chunk of customer deposits.
Interesting.
And so they've been struggling to repay that ever since.
Okay, so Modern, I think yes. I think he answered Mr. Modern. I think he answered your question. Abubakar answered your question, right, Modern?
Personally, I don't believe that anybody was hacked, but that's my personal opinion. I've been in this field.
I know. But what I'm saying is that you don't have to agree, but he has answered the question. Whether she was hacked, Abubakar wouldn't know.
Abubakar is a journalist. So
No. He wouldn't know. He can report, but he wouldn't know. I don't want us to hold Abubakar to some standard. He's a journalist, right?
Standard. I just felt that maybe he can enlighten us better, because even with I'm a bit confused. Why am I saying it? Let us use FTX for an example. FTX kept the money in Bahamas. That is where his finance was. But he was an American, and he had money with Americans in his possession. And today, at least, to some extent, he's going to face some level of justice, and people are going to be paid back depending on their investment. But for Patricia, we don't even know how to lift the corporate V1. We don't even know how to get our money back.
What license did Patricia have? Who can tell me? Satoshi, Abubakar, Modern, what license did Patricia have?
I guess I would also add that FTX was a fraud. It was confirmed as a fraud, and investigation has been carried out by legal authorities to determine the extent of the fraud.
When was it a fraud? Yeah, when was it a fraud?
I don't understand how you can call it
Yeah,
fraud.
what is it? Because it was.
I cannot call Patricia a fraud because I'm not a government enforcer. I have not carried out any such investigation to determine that it is a fraud. We're still, as far as I'm concerned, we're still looking into the company as journalists to figure out how the company will.
Okay, but what license did she have?
I say that, to the best of my knowledge, it did not have a Nigerian Financial Services license.
But did she have any license at all? Did she have any? Modern, hold on. Did she have any license from any jurisdiction at all? Anyone? Not registration license, not SEC, but any license from anybody at all?
To the best of my knowledge, I am not sure it had a license, because on the one hand, cryptocurrency companies typically do not need a license in many places, although some jurisdictions require a license to operate the platform.
And that's the
To the
problem.
best of my knowledge.
And that's the problem. Because people, listen, that's the problem. You know, you just said she had $100 million in deposits.
No. I did not say $100 million. I said, to the best of my knowledge,
No, I'm not blaming you about
less
that.
than $100 million.
No, I'm not blaming you. I'm just saying that, you know.
I say for a fact that,
No, I'm just saying that if an institution can have even if it's $10 million in deposits without a license, and you have to talk about the people that are giving that institution money. 10 million, 100 million without a license. I don't know, man.
It is like, it's a big issue.
Okay.
People have talked about this for a long time. We don't know how to, handle cryptocurrency companies. And it's been an issue everywhere. It's not now. And, many companies have failed over time because of this same issue. So it's not unique to them.
True.
What is, however, unique is the fact that, we've still not seen the way it's been handled. It's not been the best. It's not been impressive. And it might get worse.
Gotcha.
And so customers are still trying to figure it out. So to the best of my knowledge, that's the situation I can see on
All right. Let me get Satoshi in here. Satoshi, thanks for holding on and always being patient. Go ahead, sir.
I appreciate your time, Carlo, as well, to everybody as well listening. Thank you as well for the time. But Abubakar, thank you for taking the heat for Patricia. Want to bring it up. Why I came up actually was talk about how P2P affects a lot of things. But since we've already gotten down to this level, we've touched on a lot of things. I can understand that from your point of view, you can't explicitly call out Patricia, Flutterwave, Binance, all of these guys that are holding customer funds, and whether or not they are mismanaging it. Like you said, you have to prove it in the court of law, right? But technically speaking, that's what all of these companies are doing, right? And I think Carlo or someone did point out that the issue really is a knowledge gap. For most people who are less tech savvy to really understand what's going on under the hood, they might just buy into the guerrilla marketing that these guys just push out there and they swallow everything. All they need to see is that XYZ person has given you approval or accreditation that you are a trusted company, and then Nigerians just trying to leave the Nigerian system, opt into these other criminal systems unknowingly, right? So that's just my thing. Because I'm sure that people have to speak, I just want to ask you, Abubakar, right, the streamline question. What would you say is the similarity between these questions that I mentioned, right? Because we've been calling for Hanu's demise before pandemic. A lot of people said that was crazy. How can see them on Big Brother? They're literally, how are they scammers? And they are saying the same thing for Flutterwave right now. I know a lot of other companies that it's literally almost the same template. So would you disagree with that? Would you say that Flutterwave, Patricia, Dash, all share the same template of just holding customer funds and mismanaging it? Or would you say that, and do you think this is probably riddling the tech space in Africa or Nigeria, since we are talking about Nigeria, right? How would you address this issue in particular? Then I might ask another question. Go ahead.
Yeah, I guess the first thing that I would say is nobody in the general public knew about the Dash issue until it was written about by a journalist, and it has become a popular conversation point in this session on this Twitter space, simply because of the fact that the journalist who wrote that story did a lot of work to verify the information before he went out and published it. It did not just simply write a tweet and say Dash is a fraud. Neither did he just write an article and say Dash is a fraud as a headline with no facts. And so he did the work, and he got the information, and he put out that story. And now we know for a fact that Dash had issues, and it ultimately led to its collapse. That we know as a fact because of the work that has been done. I would say the same spirit of faith or the same spirit of legitimacy also applies to when you talk about other companies too, and talk about it in the context of whether or not journalists have written or should write about those companies. They will write about those companies. We will write about those companies when we have sufficient information about them to label them in whatever form you're talking about. But again, we cannot simply throw around whatever labels. We have to figure out the facts of the conversation before we talk about any company. And so far, whatever company it is, we're still looking into them as journalists. curious journalists, investigative journalists, whichever one it is, to figure out how these companies are performing. I would also err on the side of caution to say simply because they are startups doesn't mean that the company is fraudulent. I would say that is actually one of the biggest challenges we've seen with many of these companies. They want to scale, they want to grow, they want to operate as standard businesses, but they keep having this trust deficit simply because of these many bad actors that exist. Because of what has happened with Dash, because of what people are faced with Patricia, you begin to say all companies in the crypto space or in the financial services space that are startups are fraudulent. Meanwhile, we've had companies like Bitcoins, which honorably shut down its consumer-focused aspect. Bitcoins has been around for a long, long time. It was there before that. It was there before Patricia, and it phased out its P2P aspect of its crypto app gradually until it stopped. Nobody has come out to say Bitcoin is a fraud, at least not to my knowledge. It's based on how this company handled itself, and I would say the same grace applies to so many other companies that are doing things the right way in terms of how they handle customer deposits, how they handle winding down when they eventually about to collapse. They do it in such, many of them tend to do things in the right way. So I would say, there are a handful of bad actors in the space. There are a handful of case studies that have done really poorly as a business, and also with how they've handled customer deposit. But I would say overall, many companies, particularly startups, are trying their best to operate legally, to operate properly, and to ensure that they are not the next Dash, to ensure that they are not the next, Patricia to run into troubles with how it makes its customer deposit whole. But yeah, it's a challenge, but all these companies are doing their fair bit to ensure that they are not the ones to lose customer money in any form. And of course, as journalists, I would say if we do find out that any of these companies have done so, even before the public, we will write about those companies to the best of our knowledge and with the available information that we have about these entities. So other than that, I would say it's for us to keep on doing the work, reporting on these companies without actually trying to label them as something that they are not, or we do not have the fact to say that they are. But yeah, that's where I'll leave it.
So go ahead. You had a follow-up?
Yeah, the follow-up is, it seems to me that Abubakar is being very much cautious because of his reputation. And
No. Actually, I would say no.
Can I just finish, please? So that
Yeah, please go ahead.
Yeah, thank you. I appreciate it. Yeah, I would say, from my viewpoint, you did not address Flutterwave or Binance or any of these, like you mentioned, Bitcoins. I strongly disagree with that, but that might be a bit too technical. So my follow-up question would be, for entities, startups or not, that choose to hold customer funds, right? Or customer funds, right? Looking at what we just explained now, I'm sort of reacting to the question. And the template, right? That is their business model, right? Should Nigerians be scared of Flutterwave or any other tech startup that says, hey, just bring your money and then we'll give you XYZ tokens that should represent the value that you give us, and hopefully when you come back to get it, we should have those tokens or value that you give us. There were other journalists and other hardcore Patricia people that did and still do defend Hanu and his company, Patricia. And about the Dash, they mentioned about the Dash before the collapse. So that's what I'm using, and I'm asking this question. A lot of tech companies have this template, right? Do you condemn the template where they say, bring your money, we'll hold your money for you, and we would expose you to price action, because that's what a lot of people are looking for, right? And then once you're ready to exit your position, best believe that we've got the liquidity to cover it, because it doesn't seem to be the case for most tech companies. So that's, I guess, my follow-up for that. Could you address that? And would you say for a fact that Flutterwave is solvent?
Wow, he can't know that question. He doesn't know if Flutterwave is solvent.
That's the point.
He can't know that question.
So let me start off by saying this. The first thing I would say is I'm not scared about my reputation when it comes to talking about these companies. I built my reputation by covering these companies and doing so properly. And if I've ever done anything that was, should I say, below par, below standard, it would have come out by now. And so I handle my reputation carefully, and it's not because of protecting my reputation that I'm being careful. It's simply the way it should be done. You cannot throw out statements and make accusations or whatever it is, just throw it around without evidence. You have to be very careful to make sure that you have the facts, whether you're a journalist, an investor, a startup founder, a regulator. You have to be careful. You have to be decent. You have to be proper when you say these things. So that is how you should do it. You do it regardless of your reputation. You do it because that is the right thing to do. That by the side, I would say up front that I don't know how Flutterway's financials look like. I haven't seen their balance sheet. I can't tell you whether or not they are solvent or they are not. But I know for a fact that they are a payments company. They do not hold customer deposits based on how I've studied their financials, or should I say their business model. I do not know that they have a current platform or company or business model that holds, again, the key word here is holds, deposit-taking business. The only business that I know that they do have that is a deposit-taking service is Bata, the payments app. And to the best of my knowledge, Bata is under development right now. Bata doesn't hold your money right now because it's still under development. Send app doesn't hold your money. Send app, which is a remittance product, it helps you send money from the US or from any country, and it gets deposited into your Nigerian bank account. It doesn't hold your money. Flutterwave as a company, as a payment service, doesn't hold your money. You have your bank account. The merchant has their own bank account. It only takes money to wherever the money should go to. Based on my knowledge again about how this business model works, it doesn't hold your money. That is very important. And you keep on mentioning tech companies and mentioning trading and holding deposits, and I'm confused because there are significant chunks of companies that do not even hold deposits to begin with. They are basically technology companies. You need to be able to distinguish which is which. What is a deposit-taking company? What is their business model? What is a trading company? What is an investment platform? These are very, very, very different business models that you need to know which is which. If you're not able to distinguish which is which, then you'll also have trouble distinguishing which regulator should do what. Like you cannot throw around a CBN, you cannot be talking about a CBN regulatory action for a company that is into investments. You would look at an SEC for that example. You cannot be throwing around a company that is into investment and expect the CBN to take action. Again, these are very different business models. In the case of Patricia that we've mentioned and gone over so many times on this conversation, Patricia is a cryptocurrency platform. It is a platform for cryptocurrency. And to the best of my knowledge, Nigeria does not have a cryptocurrency license, either the CBN or the SEC. What the SEC has at best is a blockchain license and a blockchain framework, neither of which is designed to hold deposits, neither of which is designed to be a trading platform. And the other license that does exist is a crowdfunding license, which is a different thing entirely. When you deal with crypto in Nigeria, you have to realize, particularly since 2021, that you do not have regulatory cover for anything. You only have best faith assumption that the consumer protection agencies might have interest in protecting Nigerian customers when they use these platforms. But in terms of legal protection, you have none. And the government has made it clear that you have none. The banks have made it clear that they are under strict regulation to not deal with cryptocurrency platforms. So everything you're seeing that you talk about with a cryptocurrency company, with a bank, with a payment company, all of that engagement, all of those activities, you're seeing they are very close to having regulatory problems for licensed businesses that engage in crypto. And they are all very careful to make sure that they do not get into trouble. So when you throw around tech companies, you mention them and say deposits, and you mention them and say trading, you're conflating so many things. Tech companies do so many things. Very few of them are into trading. Very few of them are into crypto. Very few of them own marketplaces for trading cryptocurrency. So specific. Which one is it? And based on, again, when you mention Flutterwave and saying whether or not Flutterwave is solvent, Flutterwave doesn't hold your money. Your banks hold your money. Flutterwave only is an intermediary for payment movement. Money moves from one bank to the other bank. Money moves from one debit card to another bank. Money gets withdrawn from one debit card to another bank. And that is where Flutterwave plays, moving that money. To the best of my knowledge, again, Flutterwave doesn't hold your money. So when you ask whether or not they are solvent, if you have a platform that is Flutterwave, that claims to be Flutterwave holding deposits, then I think you need to go back to that platform and check that it's a real thing. Because again, based on the license that Flutterwave has, it doesn't hold deposits. It doesn't advertise that it holds deposit, and you're talking about a different thing.
So that's a good clarification to make, some shareholders. Just to make sure that people understand that the act of holding deposits itself is a license. The act of creating credit is a license. A bank's license is to accept deposits. A deposit is different from if you give me money and you say, I want to give it to Abubakar, and you give me and I send to Abubakar. That's not a deposit. So it's very, very important that you need a license, i.e. to take those deposits into your own balance sheet, which is what the license is. In a bank, the deposits you make turn out to be the bank's assets, which it lends out and creates risk assets. But what Abubakar is saying is that for Flutterwave, when you give them put a deposit, they're not taking to their balance sheet, but they're transferring it according to your instructions. So they don't have that license to hold deposits. So if you're going to give money to a quote-unquote Patricia, you have to find out what license they hold. Because ultimately, when you guys are going to go to court, do you know what they're going to tell you? We never told you we had this license. Most of them are going to find that out they're going to tell you, we never told you we were a deposit company. But they're going to say, oh, but you gave me deposit slip. They're going to tell you, we never told you. And that's where you're going to be. That's why they make them put, for financial institutions, you have to put your license on the wall. You have to put what you do on the wall of the building. What services do you offer? Do you create credit? Do you accept deposits? You have to put it up there. If they don't have a license, don't deal. A license does not cancel out fraud, but at least it protects you just a bit.
Yeah. Because that last statement you made is exactly the point I wanted to hammer on, because people are out here with licenses defrauding people as well. Before I ask my follow-up question, and thank you for that clarification, even though the reason I lumped them all together is because at the end of the day, whether or not you are specifically a crypto company, there is still payment involved. It's all, at the end of the day, all payment business. You have to move funds from point A to point B, and then when you move funds, those funds have to be moved on a network, and then there's fees attached and all of that. So even though you specifically do not classify as inverted quotes a crypto company, there's still funds that needs to be moved, right? To Morden's point about the Namibia thing, I did hear of it. I think there's an initiative that is pushed by their central banks, and Namibia, though it's an African country, is quite stable. They do things quite efficiently, so that's it. And they're also moving with their I forget the currency, but they're also moving with their CBDC, right? And that's all part of the whole tech thing. To Abubakar's point, right? So let it not be, because there's a lot of hands. Let it not be like I'm hammering down on Patricia, right? Let's just say we have Abubakar Inc., a tech company that is just helping to teach people XYZ, right? And you're saying you don't hold customer funds. This is just hypotheticals at this point, right? And you've got a customer base, say 1,000 or 1 million people, and we are all depositing an XYZ amount. And your claim is you don't hold customer funds. You only do what we, your users, ask you to do. So my question is, how do you move the funds that we give you? What systems do you use? What networks do you use? And how are the fees accrued and all that? Because this is, I think, the crux of the issue, not really being too technical, if you get my point, Abubakar.
I think that's a different conversation.
Yeah.
Like, if you're a cryptocurrency company, and when you when people log into your app and they keep crypto in your wallet on your own app, it's a different thing entirely from what we're discussing. It's completely different. You can, have funds, crypto assets deposited at a wallet on Binance, or you could put it on a wallet on Coinbase, or anywhere it is. The most important thing is, it's somewhere. And then when you move it around to whichever network, with whichever blockchain network it goes through, it's an entirely different conversation itself. I don't feel like it's too technical. It's just where exactly is the conversation leading to? Is it like when you move, crypto with Lightning Network or with Ethereum? Like, what exactly is the point with that movement? Is it moving from one Coinbase wallet to another Coinbase wallet? Is it move like so? So that's the thing. But with many of these companies, like the case we're talking about with Patricia King, is Patricia used the money, the crypto assets were deposited with Patricia on the Patricia network in terms of Patricia wallets, to be precise, and that is where the issue is. And so that is where you have conversations. The same thing applies with an FTX, and that is why you're having people talk about you should be a self-custodian for your cryptocurrency asset. You should have a whether it's a cold storage or whatever it is, but you should be the one to have sole access to your cryptocurrency wallet, and when you need to make a transaction, you know how to do it by yourself. And that is a very technical aspect of it, and which is why people do not do it, because it's too technical. The reason why cryptocurrency exchanges exist in the first place is because the whole idea of being a self-custodian for your own Bitcoin wallet or whatever it is, it's a little bit, it's quite technical, and it doesn't scale to the population that you'd expect. Imagine if you were your own Zenith Bank, like you had to be the one to walk around with, let's say you have 3 million or 10 million naira in your Zenith Bank in quotes wallet, and you're walking around with 10 million naira, and every time you want to make a transaction, you have to go through some crazy loop to make it happen, and the other person has to figure out a way to accept that money from you. It's complicated. That is why your money is in the bank. That is why your money is accessible in the way it is at the bank. That is what the cryptocurrency exchanges model themselves after, to be a bank for crypto. And unfortunately, many of them have done poorly in terms of being custodians of wallets for everyday consumers. And that is what the issue is. It is not whatever it is that we're talking about. It is the fact that as replicas of banks, many of them have performed poorly. And they have lost customer funds either through hacks or through fraud. And so that is where the issue is right now. It is not a case of, whatever network we're talking about. It's simply a case of who is, what kind of platform has to be, or should I say, how can cryptocurrency platforms operate better in replication the kind of banking experience that everyday people expect with their regular bank, whether it's Zenith Bank or a Chase Bank. It's the same conversation.
Gotcha.
It's just different from when you throw around, the Lightning Network and whatever.
All right, Abaka, gotcha. Abaka, hold on. Abaka, I saw got lots of hands up. I'm going to make them speak. Just to get to clarify for the folks that are listening in. Abaka, if I'm wrong, I think that the whole idea of a crypto exchange is because they don't use fiat. So a bank uses fiat, which means that the currency of a bank, the cash the bank has, is legal tender across the board. So Naira is legal tender. It's used in Aba, it's used in Kaduna, it's used in Lagos. But if I have Ethereum, for instance, right, it's not legal tender anywhere perhaps in the world. So if I have Ethereum and I want, say, Polka or whatever it is, you then you are supposed to go to the exchange and say, I want Polka, I have Ethereum, I swap it out. That's what the exchange in paper is designed to do. But what then happens is that the exchange becomes this arbitrage mechanism where if I have fiat, I can buy Polka thinking that the price will go up, then I can sell and get my cash back or get my Ethereum back later. So the exchange then becomes this big casino where I am looking to get in, get out. I plug in funds, I take out funds here. And I think it's that's where the problem is, that it's not it's gambling, for lack of a better word. You go in there and you are hoping that volume, momentum will push a particular non-fiat currency up, then you can take your money back. So people are going there and not looking to transfer anything, right? They're looking to trade. So you're actually giving your money to an investment house in quote without a license. I don't think anyone goes to a crypto house and says, oh, I want to transfer money, so let me go to Patricia. No, I think they go there for the expectation of making a return or whatever deposit in quotes that they are giving to Patricia. And when you're doing that, you have to have the expectation you can lose 100% or you can gain 100%. We're not at the level where we're even hedging those deposits into Patricia. If I go to the stock market, I can tell exactly what I would lose because I can hedge. Do we have that in the exchange markets in Nigeria? I mean, not in the US, in Nigeria. So it's a very difficult market, but I just want to put that point out there. Linda, really quick, you want to unmute and say something? Go ahead before I move to Zillow and Oluwatosin.
Yeah, I wanted to add up, since it's the space I cover. So, first of all, I don't even think you need regulation for you to spend your eternity in jail. There's this guy in Turkey that was jailed for 11,000 years for defrauding investors in the crypto space, and he did not have regulation. In fact, he ran out of the country. So it's just like you don't have to be a Yahoo boy. You don't need regulation to be a Yahoo boy, and you don't need to go to. You can go to jail for defrauding. So it depends on the sophistication of the case, and I get it. But I think the interesting thing is that it's very important for us to know that the FX market in Nigeria has really pushed Nigerians not just for speculating, for hedging reasons, because it's very easy to get the dollar. For example, look at the P2P market. How fast is it to get the dollar? It's through the crypto market. So we see a lot of Nigerians using that for transaction. So I wanted to clarify that. In fact, I know a number of Nigerians that remit money constantly from overseas through the P2P to buy shares, to send funds to their family. And that's why CBN has been complaining that banks are not getting, Western Union is not getting, and they know the reason why they are saying this thing. So I just want to compare. Then another thing I wanted to say, take away the picture, is that do we really have unicorns in Africa? Because, Africa is a giant, and I go out the space a lot, and I look at the numbers, and sometimes it excites me. The world most valuable fintech company, Stripe, had a valuation of $90 billion. It took a haircut of $45 billion, and now it's worth about $50 billion. If you look at Jumia, if you invested $1 million in 2021, right now you have less than $50,000. If you look at Instacart is a profitable, one of the recent companies that got listed on the NASDAQ. Very profitable, let me use very profitable, but quite profitable. And the company at some point had a very interesting valuation at close to $14 billion, in fact at $9 billion. Now the company even listed at around $9 billion. It's still trading lower than its IPO price. So the question is, don't we see that raising money in dollars for many of these companies in Africa is even its advantage when you know that the market is Africa, for example? You also look at the fact that the currency, you see that over the years, because I invested in Google's IPO, I invested in some of these tech US things. I saw that most of these founders, if they have a strong business, if they have a strong person in tech, the other person has a very strong business background. And that's why you see companies like PiggyVest, Futaway, Paystack doing very well, because they have a kind of very balanced structured team. Why are we not looking at all those things? Because, I don't want us to look at things, but I'm just giving reality that all these unicorns were really shouting. If those companies could cut their valuations by half, because I don't see how a UBA, yes, you can say it's a bank, UBA worth less than $500 million, but they made $400 million half year, $404 million half year. Are you telling me that you're going to give me in a new bank that is worth $500 million, but lost $6 billion in 2021? These are things that we need to have this conversation, and that's why I said that we need to start enlightening people, because primary valuations are for sophisticated investors. It's very, very tricky, and US law don't really encourage retail investors to leave, because some of these things can be pop and dump, some of these things are unclear, and that's why when they come to the market, you see a lot of skeptics coming out, because from the likes of Google, Facebook, and the third generation, it's very difficult for you to see any successful tech company that have listed and is doing well. Adyen very popular payment company, has lost its valuation by more than half this year. So those are things I want Abubakar to say when talk about.
No, that's good. I mean, it's good context. Good concept of back. Abubakar, go ahead, and we'll have the other guys speak. Go ahead.
All right. I do have to add that I'm running short of time. I have to. In a few.
Okay, Abubakar, do you know what? Abubakar, before you go, Zilon is going to speak. Zilon and Oluwatosin, then we'll let you go. So Zilon and Oluwatosin, go ahead and ask your questions. Yeah. Zilon, go ahead.
Yes, I just would like, thank you for letting me speak. I just would like to bring this discussion into a Pan-African level. And being an African entrepreneur that went through the phase of not having access to capital and finally found a way to get capital and then finally found a way to scale and go at the international level, I would like to speak of what I know. And what I know is that African projects and African entrepreneurs usually are starved for capital. They don't have the opportunity to raise, definitely not locally, because locally they're basically constrained with whatever local liquidity is and allocation to venture in general, and that's extremely low. And internationally, they don't get any traction because, unfortunately, today, if you want to raise serious money, you have to go to San Francisco. We have few guys that did incubators that you've been talking about and you mentioned, but these are far in between. And my advice would be as follow. The first issue that African entrepreneurs suffer from and that today can be resolved is to be able to raise capital at the global level, and that is definitely solved via the ability to raise via digital assets. When I talk about crypto, I talk about a mean to raise money, not as an investment or doing products or doing companies within the crypto space. I'm talking about it basically as a tool for capitalization. This allows African entrepreneurs to address a global audience from a capital introduction standpoint, and it allows them to access at the same level as an Indian entrepreneur or any other entrepreneurs. Indian entrepreneurs, by the way, have been doing extremely well in using this tool in order to raise money for whatever problem is their startup solving. Once you raise money via digital assets, because the infrastructure, the underlying infrastructures allows you to do that, then you can convert it, obviously, that's your runway. And then you convert it to stable coins immediately. You don't take any speculation. You're not there that's not your crypto holdings. That's not your crypto runway. That's not your personal holdings. That's a runway for you to solve one specific problem for which people that don't know you internationally have given you money. And that's again, I come back again to the African to Pan-African culture of entrepreneurship. It's important to show very good examples of that, because the digital assets, obviously, you're raising from people internationally, so there is no international law that applies. There's obviously legal law. If you do fraud, they can go after you locally, etc. But far in between. So a lot of entrepreneurs are tempted just to take that as their retirement money and stop doing whatever they're doing because it's tough to build a company. So once you raise the money, you just convert it into whatever stable coin, you convert it into your local currency, and that's basically your runway to do the unicorn. I really encourage every entrepreneur that has issue accessing capital to prioritize the way of raising money digitally as a digital asset, using the digital asset infrastructure in order to do so, and addressing a global public, and not waste time. And I'm sorry, maybe this is a little bit of polemic, but not waste time with local incubators. Local incubators, they usually have political agendas, they usually have subsidies, they usually have things that are not productive for him to get the money, build his company, and move forward. And that's all I wanted to say. Thank you very much for allowing me to do so.
All right, so Abubakar, maybe you should just, since you're going to hop up very soon, maybe let's have you comment what you've heard, and then we're going to let you go. If possible.
Right. I guess I really don't know what to say about the second question about digital assets. I mean, there are there have been some interesting use cases for using digital assets to raise funding for a company. And, there were times when people were big on ICOs, initial coin offerings, and, we have mixed experiences or mixed results with them. But, so everybody is their own, that'll be fine. The question outstanding is about how much dollar raises can have impact on companies and whether or not, and how these valuations tend to be very bubbly. And should I say, it's been in flux in terms of how these companies are performed. I think that is a general issue, to be honest, because when you look at the examples, Olumide mentioned, he talked about Instacart, which did its IPO. Again, Instacart had not been profitable for a while, and it was profitable significantly last year, mostly because of a tax implications. There was a big bump in its profits because of it got a windfall from taxes and stuff like that. But overall, it's been a tough run for publicly traded companies that used to be startups fairly recently. I think that is a general issue for many of these companies. The market sentiment since 2021 has turned relatively negative, and so any company that wants to go public, that wants to raise funding, has had to deal with difficult conversations with investors, has had to deal with the possibilities that they will take a haircut on their valuations, which again, valuations are very subjective. And so the times are different, and that is affecting how these businesses think about their financing. I would say there are many companies that are doing well. They are doing well in the context that they are operating in. The reason why their valuations may not pop the way these other companies are, it's on different levels. Like, you can't even really tell on your own, because sometimes you're not in the room with this guy. You don't know what they're discussing. You don't know how much equity the new investor who wants to give them a $20 billion valuation wants in return. Maybe they want to own 90% of the company, and the CEO said, no, we'll hold on to what we have. We don't know for a fact. And so maybe that if they had said yes to 90%, they would have gotten a $200 billion valuation, and they'll be the most valuable company in the world. But they can't, because maybe, in terms of when they do the deal sourcing and negotiation, it just doesn't favor them the way they expect. And so there are a bunch of issues why these companies that look like they're doing well do not get the valuations that they deserve. And so that is different. That is a different conversation, generally. I do not think dollar raises are inherently bad. Like, we're talking about companies that operate in a difficult macroeconomic environment in Africa, like in Nigeria. You raised $1 million last year. $1 million last year in official rate was less than 500 naira to a dollar. Today it's approaching 1,000 naira on the official bourse. And so that makes it difficult for you as a company when you want to justify the valuation you had when the naira was trading less than 500 naira. Now you have to, your revenue has to be 4 times, not even double. It has to be way more, it has to grow way more faster than it did with the horizon that you had when it was 500 naira to 500 naira to a dollar. It's a different macroeconomic environment. You're in a difficult position. That is not something you created for yourself. You did not see it coming. You could have seen it coming, but could have guessed that the naira would depreciate from 400 naira to 1,000 naira today in January. Very few people could have said it with their full chest. Everybody could have said it as speculation and said, the naira is going to fall to 2,000 naira. But you can't, for a fact, you can't say that. You don't know for a fact that is going to happen. You can speculate, but you can't see the future. And so that is a challenge that many of these companies are facing. You have a macroeconomic environment that is not favorable to you, one, that you cannot also control, and you can't see the future. If you decide to raise money locally from naira-based investors, you might have to deal with stringent terms. Maybe they want more equity for every naira that they give to you. Maybe you don't want that. Maybe you want investors who have higher quality in terms of their ability to help you expand to a different country. Maybe these are the things that you want to have at the back of your mind when you look at investors and how you want to raise money from them. So it's an entirely complicated dynamic when it comes to fundraising, valuation, and who the investors that are giving you money are. And so I do not think, raising in dollars is inherently bad. I do not also think if you raise locally, it's a bad thing. It all depends on what the objective for the business and the founders are. If it aligns with whichever investor they want to go with, then it's okay, I think. As long as the business gets the objective that it wants with either fundraise mechanism, I think they're okay, to be honest. The one thing that is complicated, though, is if you raise money in Naira, would that help you grow the way you want to grow? If you raise money in dollars, would it help you grow the way you want to grow? Every other thing that we've talked about in terms of how valuation handicaps a company, it's a challenging topic in the sense that if a company is worth $3 billion last year or $4 billion last year, and again, so before I say that, I would say we have very few unicorns, so I don't understand why we're taking it out on them so hard. Based on my understanding, I think officially we have less than 6 unicorns on the African continent, and many of them are trying their best in terms of the macroeconomic environment that they are facing to justify that valuation that they have. And it's tough because, again, nobody saw what was going to happen in Ghana. You could expect it, but you couldn't say it as a fact that Ghana's economy would, be so bad that bondholders would see 40% haircuts on the amount of money that they've given to the government over the years. Nobody could have seen, the Kenyan economy has also had its own share of devaluation, with the exchange rate sliding a bit. Same in Nigeria too, which has gone poorly for many of the companies that operate here. So I would say that macroeconomic realities are a problem for every company investing and doing business on the continent. It is not specific to startups. It doesn't favor startups per se. Neither does it put them at a huge disadvantage compared to any other company on the continent. What is there as a fact is that this environment is a challenging one and companies are struggling. Whether or not they will survive the current funding winter is a different conversation entirely. But to be honest, I think when people understand what the climate looks like and they forecast the growth for the companies that they're investing in, based on the level of destruction economically that is happening in their various markets, I think that would help them make better judgments in terms of how they deploy money into these companies. But I do not think valuation is the dollar valuation that they're getting is destructive. I think the investors are smart people, the founders are smart people. They've put a dollar tag behind the company that fits whatever objectives that he had. It's up to the company to justify it. And if it fails, it fails. In the case of Dash, that was what happened.
Interesting.
Nobody was talking about how much valuation Dash was worth at the time it collapsed. It raised, based on popular statistics, over $18 million. And it has failed in less than 4 years. And everybody who's involved is right now licking their wounds, trying to figure out what went wrong, trying to figure out how to avoid the same mistake in the future. And that hasn't affected the valuation of every other company in the market. Every other person is going to learn from these mistakes and find a way to match up to the reality of the market that they're operating in. Besides that, I don't think we have to really be overtly critical of these companies and expect them to move in a way that we speculate that they should. I think they will do what is best for them, and if it doesn't work, we're journalists. We'll chronicle these companies as they rise and fall, and we would also try to find out where each of them had their own unique failures as a business.
Okay, Baka, great session with you. I mean, we don't have enough time. As you can see, there are lots of folks that want to talk, and some folks have asked me not to shut down the space, but just to want to have a few questions. I understand you want to leave. Let me ask you my last question, then I can just let you go. Just a quick one. Do you think it would be beneficial to the Nigerian economy and to the Naira exchange rate if we were to allow the crypto guys get licensed and allow the banks to receive crypto assets, so there could be some custody arrangements going on? So in short, the crypto guys are banned from the Nigerian financial sector. Would you think it would be beneficial if we bring back crypto, those folks, into the Nigerian banking sector, just like fintech? What's your take on that? Last question.
I mean, it's a conversation about utility and a conversation about value. The Nigerian financial system, the way Emefiele has conditioned us, I think that's the right way to look at it. Since 2016 in particular, has been such a very hostile environment when it comes to monetary policies to support how the naira, should trade, and so he has left a very ridiculous precedent for any other person that has come after him, and so you've seen a level of hostility with anybody who wants to even be involved in international payments over the last 6 years. It's unfair, it's been destructive, and we're only now beginning to understand how much destruction he has caused to the Nigerian economy. And so I would say for that question, it is a question of how is the government going to embrace it fully? Because again, the one thing to understand is Nigeria has had currency controls for a long time. Even before Emefiele, there were currency controls to ensure that the naira to dollar exchange rate was stable. What has happened in the last 6 years is the rate of that gap has accelerated so much that it's no longer sustainable. And again, the rest of the economy has just been messed up with the dual reality of MIFI and Buhari. So that's a general issue. Right now, do I think that opening up the crypto space in Nigeria would help? I would say if the government is able to find a way to ensure that cryptocurrency plays nicely with the Nigerian financial system, I think there might be some value there. For example, if you're able to send USDT from the US to Nigeria, and that USDT, you can move it from your USDT wallet into a Nigerian bank account, and the CBN can track that transaction happened legally. It was not fraudulent. It's something that could be valuable for an economy like Nigeria, where we have a huge or growing diaspora that is sending tens of billions of dollars back to the country, and they're looking for a fairly decent and stable way to send this money. And so I think if the CBN itself can have full confidence that it can legally track how funds move, whether it's fiat or crypto, I feel like it will be valuable to the rest of the economy generally. I do not think that it will be destructive. But if the CBN is not able to guarantee or ensure that crypto plays nicely with the rest of the financial system, what you would have is the reverse, where people would look for a way to flush out money out of the country legally and illegally using crypto, and that would be detrimental to Nigeria entirely. And so that would be my take on crypto. If it's able to track how funds move, and again, by track, I do not mean destroy the privacy that comes with crypto. I simply mean be able to ensure that the cryptocurrency exchanges involved are able to provide proper KYC, know your customer, and anti-fraud checks to ensure that a Yahoo boy, for example, doesn't simply move $100 million from the US to Nigeria, and that money is not going to be traced in any sense or form. If the CBN is able to ensure that is happening, where you're able to track fund movement legally and allow people move money legally again, then I think there might be some value there. I just got word from somebody I was about to meet. I think I have about 20 minutes left before I jump off.
Super, 20 minutes, great. So let me just front load all the guys there. No worries. I am Danielle. Danielle, you've got the floor. Please go ahead. More than I see you, Danielle, go ahead. Yes, sir.
I think he's left. Daniel has left. I just wanted to touch on the privacy issue quickly, if I could jump on this because of what Abubakar has raised, right? So this is the narrative that most people who want crypto adoption in Nigeria sort of push, where they say the government should KYC them or give them ability to have themselves KYC so that they can move funds. But the sad reality is most of the people who really understand how to use the technology choose to do so in a non-KYC fashion. Those are like the real people that have huge volumes. So therefore they go for other technology tools that ensure that privacy attribute or advantage. What are your takes on people who choose to
not want to use KYC because that is really what the technology is about? Are you against people who are pushing for non-KYC use of the technology, or people must KYC themselves so that the government can track the phone?
Yeah, Carlo, sorry. One minute, sorry. I wanted to talk of I wanted to add up that SEC banned Binance this year. In fact, SEC not let me do this ban. SEC advised Nigerian customers to avoid the world's most popular crypto exchange. Now, we also need to understand that, you see, I'm not, a lot of times I will fall through the crossfires. People think I'm a CBN contractor, and the reason is because I tend to look at things from the fair side. Now, the CBN is not just critical about crypto. The central banks are very critical about. My HSBC account, I got a message last month that if I did any crypto transaction, the account will be closed. I have accounts in other jurisdictions that with popular banks that these are countries that they have very sophisticated. So there's this enmity between banks and crypto space. But I know where Carlos coming from. But you see, the trick is that the P2P market, for example, has become systemic important, and because it's not under the jurisdiction of Nigeria, it's very difficult for the CBN right now to interfere. We need a security exchange approval first, and they said that they don't have anything close to that yet. Also, I want to spoke about utility. We have utility case in the crypto space. We have banks like the Central Bank of Saudi Arabia is working with XRP network in terms of this kind of SWIFT transaction because it's faster than SWIFT. So we have crypto assets that do those things. And there was a time UP and MoneyGram also, because I covered that story, I think 2020, 2021, they had an application with XRP, but it didn't really because of the ban. Going forward, I think what is needed here is a cohesive financial system where if you know you can't really bring in these guys like what the British or you align, you make policies that will attract liquidity to the system. So what am I saying? Rather than banning crypto, I feel like there should have been a case of okay, if you want to deal with the banks, you must have certain deposits, you must meet certain metrics. Because someone like Binance, for example, they were willing to go, they were willing to register. That's what they did in France. That's what they're trying to do in UK. That's what they did in Japan. So back to the question is that I think we need to look inwards that it's not just these guys who want to ban. I don't even with the fact that yes, no, it's not. It's not that they just want to ban. These are things prevailing. But the United States is the only country in the world that can afford to ignore the crypto market directly because they are the reserve currency. Many countries don't have that luxury. So I wanted to add that protection.
Okay.
Yeah, but that's cool option. Go ahead, Abubakar. Sorry. Go ahead.
No, I want to get Moderna because Moderna is going to... Abubakar, do you want to take Moderna or you want to take Olumide before I let you go? I will add Moderna to ask this question. It's going to be your call since I've been here for about, I think, 15 minutes now.
Yeah, I quickly forgot what the first question was.
The first question was about privacy.
Yeah. Yes, privacy. I would say, crypto basically gives freedom, financial freedom to people. And, there's been good actors that have leveraged that freedom that, cryptocurrency brings. And there's been a lot of bad actors who have misused it and created bigger problems for everybody involved. And again, Nigeria is a country that has a cybercrime problem with so many young boys who cause trouble for us financially abroad and locally. And so we have to look at our market from that context to say if we do support a pro-privacy environment for cryptocurrency in Nigeria, would the scams and fraud that we have been so unfairly, labeled that we are one of the worst enablers in the world, would those activities continue? Would they continue en masse? Or would they slow down? Would they stop? If we cannot fully answer that question, then we have a problem, a real problem that we have to address. But generally, there are a lot of people who use crypto because of its privacy tools, and that is valuable. for everybody who are trying to escape, like what Emefiele was trying to do in 2020 and 2021, where he was actively blocking people's accounts because they supported the NSAS protest. In that kind of scenario, crypto is useful, and it has real advantages. But yeah, I would say it's up to first what the individual involved in the cryptocurrency activity wants to do. If it's not fraudulent, then it's up to you. It's your choice. If you can, actively or properly log that transaction so that people know that this transaction, like when people, the financial system knows that this transaction is not fraudulent, regardless of whether or not you put your identity there. But that is where the challenge is. Do you want total freedom to access financial tools in a market like Nigeria that has high rates of cybercrime? Or do you want to have protection where the market itself is able to ensure that risk of cybercrime is reduced to the bare minimum and everybody can feel safe transacting in the Nigerian financial system? That is the bifurcation of the market that we are in when we're having this conversation about privacy. Nigeria is not in a space where a person can make a statement and say the Nigerian government is watching us. You can say that, make that statement, and you see how true it is. And you can also see how nuanced it is.
I think Carlo accidentally muted everyone.
Not me. Everyone should be able to speak now. I didn't touch it. Olumide, can you hear me?
Yeah, I can.
Yeah, I didn't touch it. I think it just went off or so. I didn't touch it. Abubakar, you're okay to speak. Go ahead.
Yeah, so that would be my point. Is like the Nigerian financial system is different from the US. If we want pro-privacy, the financial system would have to get to a point where it feels safe with the level of transaction activity that's happening. If we want pro-security, the system itself would have to ensure that it's not maltreating people or unfairly targeting people that use this exchange mechanism. And so that's where we are. We don't have that level of trust with the government, and we also do not have that level of trust with some of our citizens who are engaged in huge volume of cybercrime.
Would you say that it is wrong to deal with people who give exposure to cryptos that are OFAC compliant? Because once your token is OFAC compliant and you're asking for regulation, you're basically calling for, because in the case that you did mention, right, of the answer, the people who resorted to finding a solution during the answers debacle chose to use a technology that wasn't so stringent and OFAC compliant and could use chainalysis and all of that, right? So should the message rather be people, while I agree with you, right, but I would slightly disagree that privacy would push out influx of money. I think that what Nigeria needs, or what Nigerians need, like people like Carlo are calling for, is more of the dollars, residing in the country to help move the economy, whether or not the people who hold the dollar are good or bad people, right? So if there's more privacy, you allow people to freely use their money within the, that's just how I see it, right? Freely use the money how they feel. So could you just speak on this point, OFAC compliant tools and the ability for people to choose to use privacy tools, even though you touched on that?
Yeah, I mean it's probably the same thing in the sense that they were overly compliant because of the realities of the Nigerian market. They had no choice. Like, you wanted to make sure that you were able to operate in a market again with 200 million people. You expect that you be able to serve that market, and so you're trying to find a way to remain comfortable with the regulators and not have issues with them, and so that is completely fine. And if you're able to do that without any problems, then go ahead as a business and do so. But the challenge has always been, when it comes to the exchange rate, it's multiple problems. You have to look at it from the balance of payment perspective for Nigeria, the balance of trade as perspective for Nigeria at the same time. Like, all of those issues that have to do with whether or not we have enough dollar reserves, which stems from the fact that we don't export enough to be able to have enough dollars in our bank account as a federation to be able to fight or maintain a decent, or should I say, stable exchange rate. And that is something that the government itself has to ensure. It is not something that cryptocurrency alone can assist. It is not something that people simply moving money in and out of the country itself would be able to address. If the economy is buoyant, if we're shipping as much oil as we should, if we're trading as much exports as we should, so it's fairly good on this. If you look at historical data all the way before 2016, you would see where the trouble started from, how the dip happened, and you would see that it coincides too with the collapse of the naira during that same period. So it's not simply a problem with the monetary policy of how people move money in and out of the country. It's also a problem with how the government itself is marshalling the tools for exports and also supporting an industry or industries that can put people to work, help people earn decent income, and also provide productive industries for exports. So we do not have all of those things working efficiently right now, and so that affects the whole economy, including our exchange rates. But I would say, whichever companies they are, if they're able to maintain compliance and also able to serve their customers fairly or properly, that would be a win-win for everybody. But unfortunately, like we all know, the legal system and the justice system in Nigeria is not working optimally. The economy isn't performing optimally. The trading system for export isn't working optimally. The logistics system for moving goods and services within Nigeria is not also performing properly. So we have all of these deficiencies. And the only thing we can do as a government is fixate on how to ensure that we have a stable economy, a stable naira, without actually providing the resources to make sure that happens. And that has been our dilemma for the last 6 years. And if we don't fix those fundamentals, I don't see how we'll realistically adjust to a pro-crypto environment that serves everybody effectively.
Strong point. Modern, let me get you to come in. Thanks for holding on and being patient. Go ahead, sir.
Thank you very much. The discussion have moved away from my first point, but I hope I don't drag us back. Well, the trading space for forex, and I must say that on different occasions, I have from my house in Nigeria called out some scams in America and Canada, and the companies have crashed. I didn't have to go look at anybody's balance sheet or do any research. Just from my house, I've called out a lot of companies. When people show you who they are, believe them. That's all I'm going to say for that, because it is not whether I've done any big investigation or not. It is just that I will just see the truth and I will just say it out. Sometime last month, someone told me he wanted to invest in a company. I told him this company is going down, and 2 weeks later the company went down. Currently, the CTFC is suing them, so I hope the CTFC will recover the money of retail investors and traders like myself and give back to them, but I don't see that happening anyway. Then now to the discussion on what Mr. Kalu just raised, which I for the first time I would disagree with Mr. Kalu. Who wants integration of crypto in the banks. I'm not an expert on economics, so in case let me make that clear first so that nobody will come for my neck. First of all, based on my little experience with my little money in the bank cannot even do transactions. Our technology for our banking system, I believe, is borrowed from the West. You transfer somebody 5,000, the person will receive 4,800. You don't know where it today. Nobody can understand where that 200 go. Maybe they will say it is CBN policy, and we are going to speak English, and nobody understands, and that just dies down from there. And then also we have multiple rates. I cannot go to the bank to receive to collect dollar. I remember I wanted to account in a particular bank, I won't mention. The bank to call Aboki, let me use that. That's what the bank said. I don't know why you should do that. That the Aboki will bring the dollar for me. That they're in the inside. Anyway, it is really ridiculous. Foreigners are here, so let me know the market in the country. But when I went to collect when I wanted to collect my dollar, the bank wanted to change the money for me. They told me that they are going to give me in a rate that I did not bring. Like the bank basically wanted to cheat me in broad daylight. So if the bank can do that with our own currency. Is it with Bitcoin that they will not do that? The bank will just wake up one morning and tell you that the exchange rate is 82,000, but in your phone you're seeing 32,000. Before you know now, you have lost 64,000. So these are one of the issues that I will not agree for the bank to go into crypto, because they cannot even measure normal currency, dollar to a naira account. And secondly, the technology, the blockchain technology, I don't think the people in the bank understand. My father has a degree in banking and finance. It's taking me time to explain what is blockchain to him. So is it the average banker with certificate in English that to get that? If you cannot understand blockchain technology, a banker that studied fishery that is working over the counter, how do you want to explain how a transaction will work? Even interpret that data. These are real life situations that even it's not even government, it's just the technical. I managed to study law in university. Two people sued each other to the court because of a crypto transaction. The judge said they should print the documents. Something that we are going to check their two gadgets, do some forensic investigation, and let us see the blockchain. My friend from the university said that as a research person, he called me and said that what did they do? He now showed me some documents instead of them subpoenaing some phones, if that was the right word to do. And thirdly, we in the Nigerian space, we love control, particularly from the government side. Anything the government cannot control and they don't know how to tax, then they will just destroy. That's why Abubakar here talked about Emefiele and his rogue practices, because they want a system whereby they can be able to track. This morning I read an article from a political figure here, I hope it is wrong, that Access Bank is suing a group of people because of somebody hacked and the person went to do transaction in pound to pound, in peer-to-peer rather, and all of a sudden it is the dealers that are being sued, not even the hackers. So I hope that is a lie anyway, because in a same climb you go for the person that collected money, not for the people that sold something from the alleged criminal or whatever. And also for this space, I felt so bad in this space at the point in time, because the topic is funding, scaling, and funding and scaling are part of the topics, but we are ending up talking about scams and talking about problems and issues, and we don't even mention a company that needs funding or a company that needs scaling. Instead, we are looking for some sort of consumer protection and some sort of good behavior, which I believe is not even good for investors, because investors will not come here to this space and maybe they want to hear about our companies, but instead we are busy calling out some companies that have run away to Estonia, as the case may be. And then in conclusion, sir, our banks are not really doing a good job. You make a transfer today, the person will receive it next week. So if it comes to crypto now, because we don't even have light as common as it is, somebody that want to, let me say our volume gets to like $1 billion per day now, for example, how will the bank handle such volumes of transactions when they off the chain around 8 o'clock? Because for crypto, they will need at least a constant power supply. So a chain that is off at 8 o'clock now. So when you receive your crypto by 10 o'clock now, before you know, your money have disappeared by 2 a.m. So these are the things I wish people in the tech space can at least clarify, so that we can see what to do, not just the central bank, but the bank themselves. I believe that they are clueless. They don't even know what blockchain is. Thank you very much, sir.
Yeah, lots of questions. I'm not sure if Abubakar can answer all as this is time bound, but let me just address a few issues. Really want to talk about funding issues for tech space in Africa. And at the very top, Abubakar talked about the funding in Africa, and just number one, about the African companies still having funding issues. We did touch that. We talked about going concern. That's what we said. Talk about the what's their name, the Dash and the rest. We spoke about those guys as well. So it's just to touch base and see, take a thermometer to the African tech space particularly. We're not trying to raise funds here, but he writes a lot of good stories, and I wanted to bring this one that we just talk around them, right? It's very instructive for investors to come and listen to us talk about this company, so they can also get a gauge on how we do view this company. I think we've done a good job in bringing up many issues. Usually when I do spaces, we end up discussing what's not on the cryo, because really topics can go everywhere. I think Abubakar has been very, very patient with us and has given us his own side of the issues. He's not a regulator, he's just a journalist, and we've really put him under pressure, and he has answered. So let me just say it that way, that it's been a good session with him. Possibly we'll try to bring him back. Remember, we're also off for 30 minutes. So he's been here technically 2 hours or more with us. Abraka, let me just have you on mute and probably just go ahead and give your closing remarks, and then if possible we can leave the space open for a while so folks can talk. Otherwise, let me just have you do your closing remarks if you don't mind.
Alright, thank you so much, Kalu. Thank you once again, everybody, for having me on this space. It's been a fantastic conversation. To be honest, it's been mind-blowing. Hearing people talk different perspectives about the industry that I cover so intensely, and hearing the perspectives too. And so it makes me, it helps me gather feedback for what next I'm going to write about and how I'm going to write those stories. And I would also take advantage of that to say, I hope that more people would read tech stories published by TechAbout actively, and stories published by me and my colleagues at various publications, at TechCrunch, at WeTracker, at TechNext. Please follow the stories. And I also have a Substack that I haven't published much, but it's there, and I'm hoping to publish more actively over the coming weeks. So please follow and subscribe if you can, so that you can continue to have more updates.
Can you put the link? So sorry to really interrupt you, but if you can, put the link up in the nest to your Substack, it'd be lovely.
I don't know how to put the link, but the link is on my bio on Twitter. Like literally when you open my bio on Twitter, you'd see the link. I don't know how to put the link on the Twitter space, but it's on my bio. But yeah, and so I'm really excited about the conversation that we've had today. It's always very interesting because most of the time that when we talk about tech, we have a lot of people talk about it. We talk about the investment side, we talk about the product side, we talk about the talent issues, the corporate governance, but then you have the customer support issues and the customer enlightenment and educational aspect of it. And there are a bunch of generally there are a lot of issues that people face. Some of these issues, they do not get adequate responses to them from the companies or from the regulators. And I tend to see this a lot, like when people, like a company will tweet something, or a Central Bank of Nigeria will tweet something, and right under that tweet, you see hundreds of messages from everyday people who are asking the central bank to look into what Zenith Bank has done wrong to them, what one other company has done wrong to them, what other banks have done wrong to them. And to some extent, the banks do respond in those messages or those Twitter posts. And so, yeah, I understand where everybody's coming from when they talk about the tech companies and how they've been burned by, not necessarily bad investment, but should I say fraudulent and, bad practices by the companies that they have done business with or traded with or worked with. And so those issues are fairly standard and fairly understood. But yeah, again, I would say thank you again, Kalu, for hosting the space. And I hope that more people, again, would read this. Thank you so much for putting it in the Substack. I hope that more people would, read the stories as we publish them, engage with us. If you have questions, again, if you have tips, if you notice anything about any company that you feel is shady, please do reach out to us, myself, other journalists. Send us a DM, tell us what you have, give us a tip, because that is really how journalism works. Once we have that information, we'll begin to act on it as quickly as possible, and that would help to provide the rest of the reporting that you see when you read about a company that has gone bust or a company that has done evil to their customers. We need your information to be able to do so. We need your tips to be able to do so. And please, please, please feel free to reach out to me, to Carlos, to anybody who covers the industry to be able to share this information anonymously and also properly too. But yeah, thank you so much, and do subscribe to the Substack.
Thank you, Rebecca. And last question for you. Is TechAbout, are they local? Is it a Nigerian company? Or I've also wanted to ask that question. Was it TechAbout? Are they guys local?
Yes, TechAbout is local. TechAbout is based in Lagos State. TechAbout is a subsidiary of BitCabal Media, the same company that owns Zikoko, the popular pop culture website. And so we own that, and TechAbout too.
What, the TechCrunch? Is it you guys as well?
No, TechCrunch is an international publication based in the
Gotcha.
US.
So Cabal is local one then. Okay, it's local. Gotcha. Okay, just clearing that up. Okay, super. Okay, thanks, Abubakar. I mean, I can't thank you enough. I know we've gone back and forth on this, and I appreciate you coming and spending time and just educating us all. I think I've learned a lot today, and I thank you for your time. I appreciate it. For all those that also contributed, thank you so much. I think we've taken cognizance of it. This stuff is recorded. If you go to my top of my TL, you see the podcast link there. Once we're done, I'll share it so you can also listen to it. If you have a question or follow up, send me or Bakar a DM, and of course to address it. We always here every weekend, Sunday 7 p.m. talking about money, finances, and of course the economy. We're going to be here next week again. I'm trying to bring in some big boys that have 2 apps that we can talk about Nigeria, how to track things in Nigeria, and talk about the budget and all that. So we'll be here next week Sunday again with us when we do that. Also get my book, guys. If you're interested in investing, you can't be an investor if you don't understand how money works. You cannot know how money works simply because you earn money. That's like saying I'm a doctor because I have a body. No, you've got to understand how money works, how it's investable, what are the risks and all that. So get the book. It's on Amazon. It's titled Let's Talk About Your Money. Read it. Understand how to invest, how to do an asset allocation, how to do a simple budget, how to understand what return on investment is. Read, understand, and most importantly, apply. Don't wait before you invest. Invest, then you start to wait, right? All right, folks, I'm going to let you guys go. Enjoy the rest of your weekend. Tomorrow is Monday. It should be a blessed weekday for all of you guys. Peace to the world. Thank you, Abubakar. Thank you, Limited. Thanks to Satoshi, all guys that are coming to you. You guys have a good day and enjoy the rest of your weekend. Bye.